Well, I think I think you can't ignore the short term, and the fact is that while oil demand has declined sharply, tanker demand has gone actually up, largely for three key reasons. One is that because of the volatility and the dislocation, we're moving cargoes over much longer distances. Secondly, there's a lot more port congestion, meaning ships are tied up and not available for their next voyage. And thirdly, and I think more to the point, we're seeing increasingly more oil on board ships, either slow steaming and therefore essentially floating storage, or actually waiting and actually engaging in floating storage. And we think that number for the world tanker fleet is now upwards of about 10%. At the same time, we see analyst reports of the situation with shore tanks, shore oil storage, filling up very rapidly, some saying that it could reach functional limits in 2 weeks, others maybe 2 months. We think when that happens, we're going to enter a new and even more volatile phase of the tanker market.
Yeah, it raises, I mean, this situation raises all sorts of fascinating questions, not least about whether your vessels are actually going to move or whether they're just going to be tied up increasingly for longer periods of time here. But this glut of refined product as well is also going to, I guess, slow delivery into refineries. So as we work through the macro implications of this crisis, how long before you think that we start to see anything that resembles normalization?
That's a great question. Of course, nobody really knows the answer. Our best guess at the moment is that we're probably looking at two more phases of the tanker market before we get back to some sort of equilibrium. And the first one is just what I talked about, where short tanks are full, and then really the oil has nowhere to go other than onto ships, which results in slow steaming or actual contractual storage. The second phase is whatever kind of the next phase would be any kind of rebound that we can expect with the global economic recovery. It'll probably result in a fairly sharp rebound in oil demand, and while there'll be plenty of oil available in storage, it won't be in the right locations. That's just inevitable, and that'll result in another flurry of activity. After that, we really don't know. I think one thing that people are beginning to talk about that will be clear is that the refinery landscape on a worldwide basis will look very different coming out of this downturn, with a lot of the less efficient refineries shutting down. And that could accelerate a secular trend that's happening in our business very, very rapidly, where you end up with more refined products moving at sea and less crude oil. Of course, under those conditions, we also expect a lower baseline of oil demand, but we think that could be offset by other factors.